What is up, everybody? Solomon here. Well, we have yield strategies and vaults on Hedera that we're going to be diving into the weeds with today. Hedera's premier DeFi platform, which is Bonzo. We're in 2026, so there is a lot to get into. It is insane that we are already in February, but we have Phil from Hashpack. I want to thank Hashpack for helping us to put all of these podcasts together. These are brought to you by Hashpack. And we have Brady from Bonzo. So, Brady, let's kick off here. Well, first and foremost, Happy New Year. And what are you looking forward to in 2026 for Bonzo? And then we're going to dive into the weeds with yield strategy.
Yeah, thanks so much for having me on. Yeah, really looking forward to 2026 on Hedera. I feel like there's been a culmination of so many things happening behind the scenes over the last year and a half. New protocols that are going to be coming online, updates to existing ones. We'll dive into some of that today for Bonzo Finance. And yeah, overall, just bullish for Hedera, I think, for 2026.
100%. Well, walk us through. What are we looking at here? I know this was an announcement at the tail end of last week, and I guess let's hop into the meat and potatoes and walk us through what the yield vaults are in beta, I believe now. So yeah.
Yeah, no doubt. So, well, I'll give some background on myself real quick. My name is Brady Gentile. I'm the co-founder and CEO at Bonzo Finance Labs. We're a development shop that contributes to the open source development of the Bonzo Finance protocol, which is an open source DeFi protocol on Hedera that started with lending and borrowing, and just recently this year has made available yield strategy vaults. So automated yield strategies for holders of liquidity in the Hedera ecosystem. So major assets, as well as wrapped bridge assets from layer 0 and assets across the ecosystem, like Hashpack, Dovu, Jam Token, a number of others. So yeah, we're excited to get this out the door and help bring another primitive to Hedera DeFi.
So I guess a question that I have is, it's interesting because I know from the Hedera stance, I mean, you could look at a couple of other networks out there that are similar. They're, I don't want to say like late probably isn't the framing. It's more so, well, maybe let's just say that it's taken longer for the Hedera DeFi ecosystem to build out. And I'm curious from your stance, because you're building this stuff at kind of the ground level. What are the pros and cons of that? Because there's been so many almost like let's just innovate and push shit live, and then stuff goes really wrong really quick. We've seen throughout crypto. But also, there's sometimes an issue with not getting stuff out quick enough. What type of opportunities does it kind of give you guys to take industry lessons learned to build out some of the solutions that you have? And you get where I'm going with that, though, right? Yep.
Totally. Yeah. Yeah. I think it starts at the network level. You're saying there's some catch up that's being played, by the Hedera network or in the Hedera ecosystem with regards to some of the more like native DeFi functionalities that we see across Web3. When Hedera launched back in 2018, I think there was such a strong focus on enterprise applications and larger institutions. And, when it comes to emerging technology, I think that market timing is one of the most important things to try to get right. And it's one of the most difficult things to get right. And, I think it was acknowledged that the timing in terms of enterprise and institutional adoption was off a bit in terms of how fast that was going to coalesce. And so it started with a strong emphasis on it. I think that changed probably a couple years ago, where there was some revamping of the Hedera Foundation, for example. The focus started to emphasize retail adoption over some of these enterprise applications. I think regulation was largely a hindrance for enterprise and institutional adoption for a really long time. And then if you think about the way that emerging technology evolves, and to steal a quote from Chris Dixon of A16Z, the next big thing always looks like a toy. I think in most cases, when you look at DeFi and you see like monkey pictures and sushi tokens and things like that, a lot of that is sort of a requirement as part of the evolution. So underlying some of the fun, exciting things that we see across the industry are some really incredible and advanced technologies that um, are going to be foundational to DeFi. And so, these networks, I think, have to evolve with the industry as it goes along. Um, Retail adoption plays a really big role for laying a foundation for enterprise and institutional adoption. And we're even starting to see that with like Aave and their deployment of more consumer easy to use consumer facing applications like a savings account for USDC. The yields for that are coming from the Aave DeFi protocol, people who are borrowing USDC and paying yield. But this application that comes out, that people can use is really simple and easy, and there's on ramps, and they don't really have to be like native Web3. And so it's a good example of showing how retail adoption and native DeFi adoption is really important. It's laying the groundwork for some of the more institutional adoption that we're going to start to see because regulation has kind of changed. And so, with that, Hedera has done a great job on the network side of building robust infrastructure and technology and code base for the network that is quote unquote enterprise grade. And so any application that's built out, even if it's a retail focused application or a native Web3 application, gets the benefit of enterprise grade infrastructure for building on top of. And so we've gotten the benefits of that for sure. I've seen the Bonzo Finance protocol's operations on this network be incredibly robust, fast. Hashgraph consensus has been incredible in terms of those fair ordering of transactions and the fixed fees. Predictable costs when it comes to things like liquidations, predictable costs when it comes to like vault operations, like rebalancing. So, we've inherited a ton of benefits that, we've observed with the protocol that we're helping develop.
Yeah, don't you think it's you brought it up a couple of times. I find irony in listening to people like Larry Fink and some of the others at like BlackRock that are like talking about what's going to happen to real world assets when they come on chain. I'm like, oh, he's talking about DeFi.
Yeah.
Like in a way, it's obviously a much more regulated version of it. And because at the end of the day, they're not like these entities are not just tokenizing RWAs for the sake of like blockchain technology because they could care less about blockchain technology. They care about how can you maintain the state of this asset but give it more things to do. And I think it's going to be really interesting just as a sidebar for me on a network like Hedera that has a lot of kind of that legwork done from the enterprise and institutional stance, although probably a lot of that, maybe we don't see publicly whenever we do have the compliance and things like that, because building out trust with some of these enterprises is very difficult to do. And I just look at platforms like what you guys are doing, because I think you hit the nail on the head. I think you guys are building out platforms that are, I would expect, Bonzo to interact with lots of different RWAs at some point in time and all sorts of different stuff. It's kind of like the writing is on the wall, but it takes lots of steps building wise to get us to that point. And yeah, I would love you if you could walk through yield vaults, because that's certainly part of this.
Yeah, no doubt. And agreed with you on that. I think that'll be a big feature, I think, for 2026 too. Going back to that is RWAs and sort of this fast-paced evolution that we're starting to see. So yield vaults are automated yield strategies that allow users to deposit liquidity into a vault, and the vault automatically manages that liquidity in order to optimize for yield. And there's 3 different vault strategies that have been made available on Bonzo Finance initially. Bonzo Vaults are permissionless. So while it's starting with these three strategies, any developer can actually come in and build custom strategies on their own and deploy those strategies as a vault for anybody in the ecosystem to participate in. And in doing so, there's an incentive model there where there's a strategist fee. So if you're a developer and you're wanting to build, you have DeFi strategies in mind where you can automate them and earn yield from doing so. You can deploy the vault, and then any yield that's earned by users of the vault, you receive a fee for doing so. The first two strategies are single asset DEX and dual asset DEX. And they're very sort of descriptive of the name themselves. So single asset DEX is you can deposit a single asset into a vault, and it is routed to a concentrated liquidity pool in SaucerSwap's DEX, and it earns yield on that underlying pool. So good example here for single asset DEX is HBAR paired with Dovu. You could go in and you can see here you can deposit the HBAR asset, and it gets routed to the Dovu HBAR pool in SaucerSwap and automatically manages the liquidity for you. And if you're familiar with SaucerSwap V2 pools, they are concentrated liquidity pools. So they function similar to Uniswap V3. And when you have a concentrated liquidity pool and you're supplying liquidity into it, you have to go through a manual process of setting ranges for price ranges for the assets that you're supplying. And the tighter that range, the more yield that you can earn because it's closer to the price, the current price. And the wider the range, it's less yield, but there's more flexibility for the price to move without you falling out of range. And most people, they try to probably set it towards the middle, but they have to come back and withdraw liquidity and sometimes swap and then redeposit it around whatever the current price is. And if the price is moving really quickly, users are having to do that more frequently. And if the price falls out of range, it's often that your tokens end up on one side versus the other on the pair. So if it's a HBAR Dovu pair and you're depositing into a SaucerSwap V2 pool and manually managing that, you may end up with like all HBAR or all Dovu. And what these vaults do is automate the management of that, so you can deposit and you don't have to manually perform all of these different actions in order to keep your liquidity within an active range earning yield. And for single asset DEX vaults, these allow you to deposit just one side of the pool, and it has a ratio of the two tokens that exist. So for HBAR Dovu pool, this vault is an HBAR vault. So a majority of the liquidity stays in HBAR, and a portion of it exists as Dovu. And it is constantly rebalancing. It is trying to protect the main asset that is being deposited into it. So the HBAR asset and the liquidity is being sort of preserved here to ensure that when you withdraw, a majority of it is attempting to be HBAR, which is the asset that you deposited into. And then it is wrapping the liquidity around whatever the current price is. And so, what users are finding from what we've observed is, it's far less hassle than trying to do this manually. It earns users yield and attempts to maximize that. And it's great for the decentralized exchange as well, because when the liquidity in an underlying DEX pool is managed automatically by a vault, that liquidity is always trying to be concentrated. And that ensures that users who are trading against that pool are always able to have the least amount of slippage, against those trades so they can trade more. And then most of those trading fees end up going to the individuals who are supplying in the vault, because a significant amount of that is obviously automatically being managed. It's within that active range. So that's the single asset DEX vault. And this is one example with HBAR and Dovu, but there's a number of different vaults that support other underlying SaucerSwap V2 pools for this type of strategy.
That's awesome. So can you tell us, Brady, like what can people do right now? Because I know, like, you guys, as I mentioned, like last week, I think the post that came out said beta. What's the kind of the status right now of where you guys are at? When do you kind of and then kind of how do you foresee the near term kind of playing out for vaults?
Yeah, so vaults are still in beta. They were launched at the beginning of this year, and we are looking to try to bring vaults out of beta in the coming weeks. The most recent development with vaults was the addition of some new vaults around wrapped bridged assets. So, last year, Layer 0 came online for Hedera. There's wrapped Bitcoin and wrapped Ethereum that could be bridged from pretty much any EVM network onto Hedera through Stargate, which is a Layer 0 based bridge. And you can deposit wrapped Ethereum and wrapped Bitcoin into Bonzo Vaults. And again, those are routed to the underlying SaucerSwap V2 pool and earning yield. And so these actually just launched today. So, wrapped Bitcoin paired with HBAR, wrapped Bitcoin paired with USDC, and wrapped ETH paired with HBAR, and wrapped ETH with USDC as well. And so, yeah, folks can bridge those over and then deposit in their ERC20 form that they're received in.
So obviously, from my end, not financial advice or Genfinity's, but I want to ask, like, when you look across other networks, what would be a success metric for Bonzo for people to bridge their native, like Bitcoin, Ethereum, things like that? Like, what incentive are people finding on other networks in comparison to like kind of what you guys are doing on Bonzo? Did I ramble too
Also,
much?
no, that was great. Ultimately, it comes down to yield. I think as the space matures, especially for institutions, we're finding that um, folks aren't exactly sort of dedicated to a single network. I think there's probably preferences for folks, but ultimately it comes down to, am I able to generate revenue by participating in DeFi on XYZ network, and is it going to, yield a greater return than doing so on a different network? And I think that's going to be even more especially the case into 2026 and beyond, because I think we're starting to see sort of the obfuscation of some of the behind the scenes infrastructure for bridging assets. When that starts to dissolve and go away, and you have your wallet, and it doesn't matter what network you're on, and you can kind of just cruise around and participate. And there's sort of automations or workflow automation that makes it even easier to participate in multi-chain. I think it's ultimately going to come down to yield, when it comes to supplying liquidity or participating in DeFi, and slippage. If you're a trader that's trying to, institution that's trying to trade a significant amount of funds, does the DeFi ecosystem on whichever network you're participating in, does it allow for facilitating large swaps? And can you do so with minimal slippage? Can you do so with MEV protection? For the MEV side, that's something inherent to Hedera that's prevented, which is really great. We've seen a lot of benefits from that, but yeah, I think the walls are sort of coming down between networks in many ways.
Yeah, I guess that leads me to kind of asking, maybe some of the broader questions. Um, it, it seems like over the past like year to year and a half, there's really been I think a lot of this stuff is driven from like stablecoin adoption. Obviously, the Genius Act went through. Um, and now, funnily enough, we're kind of seeing like, well, this has been happening for a while, but I guess through the mainstream crypto space, we're starting to see talk on like tokenized deposits and things like that.
Mm-hmm.
How do you kind of look at the ways that the way that this industry is kind of moving forward with, what role stablecoins have, versus kind of native crypto assets versus RWAs when it plays in? Because you sit in a unique position, not only having kind of like a marketing background, so you can kind of see what is kind of being shilled out there at whatever given time, as well as actually building out like the infrastructure layer. And I'm just curious your take broadly on, what's going on in 2026. I think a lot of people are shocked with the state of the industry right now, given how much adoption we've had.
Yeah, regulation changes a significant number of things. You have, previously, I feel like banks were blocked out, institutions were blocked out from participating in the crypto industry. That's largely changed. We have, legislation like the Genius Act, like you said, that um, sets up guardrails and rules around stablecoin adoption and issuance. And I think I think there is too much value to be had by stablecoin assets on these networks for banks to not want to participate in that in some way. I think it's yet to be seen in terms of what that participation looks like at the end of the day. But for customers, it's clear that banks view stablecoins as both an opportunity and a threat. Where if just like any sort of emerging technology, when you have an incumbent, they're going to view this new technology as an opportunity and a threat, and it's whether or not um, they can cannibalize their existing business and make this work. The cannibalization for banks is going to be the fees that they're earning for acting as an intermediary for the transactions that people are doing today in traditional finance. And when you have a blockchain network that's trustless and you can do instant settlement and you can have instant liquidity and move funds around and all of the benefits that we're seeing within the DeFi crypto space brought into traditional finance, I think it's a no-brainer that that's something that's going to be very disruptive. And so I'm most curious to see how they adapt to that. Is it going to be um, it feels like it might be fun and games at first and like, hey, this is great, this is partnerships, until they start to have their lunch eaten by some of these organizations that are a bit more forward thinking. And so, we'll see. It's also a generational thing. It's similar to how sort of Robinhood evolved, where um, Robinhood started with a very, very young generation of people. Its service offerings um, were very um, rudimentary, but they catered to a younger audience that sort of understood them. And then as that audience grew and mature and needed different types of financial services, Robinhood evolved with them. And so I see the same thing, I think, for the digital asset space. You have a young generation that grew up with Fortnite and skins and digital assets and all these things that they're just most comfortable and familiar with. And any company that's sort of able to build themselves out in a way that feels comfortable for younger generations and they get older, I think that's ultimately going to be a big win.
Brady, I know, and Phil, I don't know if you have anything here, but I do know that I've this was maybe like, what is it now? We're in February, so this is like middle of last year, earlier last year. I don't know if you were getting this too, Brady, but how many people like coming up to you being like, "Man, this time is different." Like, like in crypto in general, I had so many people be like, "There's so much adoption going on right now," which is 1000% true. I mean, you literally have some of the most powerful entities on the most powerful entities on the planet telling you that everything in the world is going to be tokenized at some point. And yet here we are, and this time wasn't different as far as like what's actually going on with the market. I'm curious your take on it. You probably, if I don't want to speak for you because I know you're going to tell us, but mine is kind of like, I don't really care. It's just like what's going on in the short term, because I fundamentally feel like there's too much like being built at like the institutional and enterprise level at this point, that the kind of the writings on the wall that this technology is getting adopted, and whatever manipulation happens in the short term is going to happen anyways, and I can't control it. But what are your takes on the this time is different uh type mindset, like just kind of the broader adoption, seeing like BlackRock, like all these gigantic entities talking about tokenization and things like that?
Yeah, I mean, I think it's clear that going back to the idea that they view it as a sort of an opportunity and a threat, I think that that holds true for this as well. Um, there's my belief is you've got, there's tokenization, which I think is like a first phase, being able to tokenize assets. We see that happening. For example, like you said, BlackRock or Aberdeen on the governing council with Archex as sort of a digital arm for them. Um, I think the sort of subsequent phases would include actually being able to use those tokenized assets in ways that are DeFi friendly or are built on DeFi infrastructure. And because I don't know if I don't see like realizing the benefits of tokenizing an asset unless you have the flexibility that we have with crypto today in DeFi, and being able to use those assets in a similar way, where if I have a wallet and I can go to various protocols that support these tokenized assets, and allows me to lend and borrow them or trade them or place them into a sort of like a yield vault. All of that is going to have to be formed, and there probably needs to be some degree of sort of permissionless nature with these assets that are being tokenized. And um, there's a few companies I think that are starting to try to do that. So like Swarm is one that's on Hedera, where there's it's tokenized RWAs and you can use them in a permissionless way. Like ultimately, I think there's probably like a middle ground here where it's almost like a walled garden, but within the walled garden, you as a user have the flexibility of being able to bring your assets to any of these protocols.
Yeah.
There's probably some sort of like light KYC light in some way, where maybe the account was KYC'd initially and the protocol allows an account that has been KYC'd by a specific provider the ability to interface with the smart contracts. I think over time we're probably going to start to see this walled garden form. And then on a really long timeline, I bet there's going to be similar to the internet, dark finance and then light finance, where things within that walled garden, are going to be established, trusted, etc. And then you're obviously are always going to have like a version of dark finance networks that aren't part of these institutions, and maybe lack regulation. And that's not to say that there can't be like privacy within light finance. I think that that's something that's evolving, but I think yeah, I think there will start to be more of a stark contrast between the two over time.
I wonder if it my wife and I went out to eat like a month ago, and I forget what people were talking about. They were talking about AI, and they were, I think I've said this before, and the one guy they were probably in their late 50s to early 60s, and the guy was like, you know why all the actors went on strike last year, right? It's like, is that UN robot or AI robot? I was like, oh,
Oh,
um, but I almost envision us like kind of leading towards a future, as you mentioned, like, you have all these vaults and there's rebalancing and of different assets within the vault and things like that. It seems to me that we're heading towards a future where it's like going to sound super cliche, whereas the internet is for information, like Web3 is kind of for value, where, and you mentioned Archax. Archax had these kind of pool tokens where you could essentially allocate portions of different things within one pool token. So imagine like part of imagine stocks and maybe some portions of treasuries and maybe a portion of HBAR and maybe some USDC. and you built out that, you know, through a customizable lens, however you wanted that pool token, whatever you wanted it to look like. I almost envision we're headed towards a future where like you're not going to have to be like, hey, I have HBAR or hey, I have USDC. It's just going to be able to be verified that you have value, and you're going to be able to do different things with that value. And I would imagine that, you know, stuff balances and reallocates. That might be like 4 or 5 decades from now. But I think that is the future that we're headed towards. I'm going to do closing statements here and kind of round us out. Let's start with you, Phil, from Hashpack Stance, and
That's
we'll
awesome.
go with Brady.
That's awesome. You know, what I'm seeing is a wonderful onboarding tool. I mean, you know, consumer DeFi is absolutely on fire. And that's a clear showcase to me that, you know, complexity can be invisible. And I think what Bonzo's bringing to the table is absolutely incredible. Like the UI is crisp. It's really, that's awesome. Yeah.
Awesome. And
I
Brady,
appreciate that.
close us out here, Brady, on, I know you kind of started out with thoughts on 2026, but you mentioned RWAs. I don't want to let you to forget about that through the lens of Bonzo and maybe just the wider space.
Yeah, no doubt. Yeah, I guess, I mean, not financial advice in any way, but if you know, if yield strategy vaults is something that you're interested in exploring, definitely check out Bonzo Vaults at app.bonzo.finance. We also have a Discord at bonzo.finance/Discord, and you know, are always in there helping answer questions with the community. Lots of great questions come through. And yeah, really appreciate folks checking it out and for having me on. And I think yeah, just excited to see what Hedera brings to the table this year. I'm also really excited for HederaCon in Miami in May, so that should be really great. I think that coincided with the F1 sponsorship that they did as well, so that should be really cool. I know that the HederaCon is I think the week after the weekend of F1, and so definitely want to try to check that out. So I'll be there as well.
Awesome. Yeah, I am certainly looking forward to not getting altitude sickness in Denver.
Yeah.
Anybody that watches this has to go to Denver ever in their entire lives. Altitude sickness is very real. But yeah, I want to give again a huge shout out to Hashpack for helping us to put these together,
Of course.
and Hashgraph, and Brady from Bonzo. It's always great to have you on, and looking forward to all the awesome innovation that comes out in 2026 for you guys. I'm sure we'll see you again. That being said, I'm going to ramp this down. Hang out with me, guys.
Thanks so much.